Good Sunday morning. I'm Glenna Milberg. If you have a home here or you plan to have one in the future, this hour is for you. You rely on those insurance companies to have your back. You pay for that. Farmers sure isn't the first insurance company with plans to exit Florida, but it became such a focus this week because new laws just took effect aimed at righting the market, protecting our ability to get affordable insurance. So here we are heading into the worst of hurricane season, wondering what is happening, what should we expect, and will we be able to afford the place we call home? In the next hour, we'll try to get the whole picture, the lawmakers, the industry, the agents helping homeowners get what they need. And we start with two of the people in high places with some of the deepest knowledge and of a complicated insurance market. State Representative Hilary Cassel, Democrat from Dania Beach, an attorney with a specialty in insurance law. And with us from St. Petersburg, former Republican State Senator Jeff Brandes, who now runs the Florida Policy Project, a not-for-profit aimed at educating and advising on some of the state's biggest issues, including property insurance. And it is so great to have the both of you here. Jeff is on Zoom with us, Hilary right here at the table. Jeff, I know you can't see us, but you can hear us, and I really want this to be a very interactive conversation because your brains are so good to pick. And I think this is going to be very worthwhile for people to hear what on earth is going on. So I want to start with the latest. AAA, even after Farmers this week, also saying a small percentage of their customers in Florida they're not going to renew, citing the very same reason as Farmers, high risk and not worth the high exposure to their business. So you've been very critical, Hilary, of the reforms that have just been put in place. Why aren't they enough for these companies to wait it out?
You know, that's a really great question. I think had the reforms to litigation been the sole cause of the problem, we would see national carriers like AAA and Farmers who have the capital to withstand that 18 to 24 month delay that people talk about these reforms taking. They'd be able to stay and wait it out. But what they're actually telling us is litigation was never the sole factor. And that's something that I've been advocating for years, that while litigation was absolutely a part of the problem, we needed to look to focus to other things that were driving the cost up. And Farmers and AAA both said it's those high costs of reinsurance and the risk associated with writing in Florida as the reason that they're leaving, and they're not willing to stay just because of the litigation reforms that were passed.
So what you just said brings up a really good headline. It is such a complicated, multi-layered. The litigation portion, Jeff, I know you know, just for our viewers, the litigation portion is one of the laws really redid the guidelines of how attorneys and insurance companies manage each other's litigation and lowering the cost for insurance companies of litigation, which was astronomical. But Jeff, there's so much more to the reform laws. And I want to get your perspective on if litigation is one portion of it, the cost of reinsurance, to Hilary's point, another portion of it. These companies define high risk. Is high risk too much money, expensive homes on the coast, too close to the coast? What is high risk?
Well, I think companies like Farmers and AAA, they shift risk around the country all the time. And so it's not kind of completely out of line for them to limit certain markets and grow other ones. Reinsurance costs have gone up. They've gone up about 40 to 50% this year for most Florida homeowner insurance companies. And the reason it is because the law didn't take effect until April of this year. And so they're still dealing with Hurricane Ian and Michael and largely Irma still. And so the reinsurance costs are largely driven by litigation, the cost of inflation. Obviously, home prices have gone up, but also the cost of building materials have gone up. And so there's a number of reasons that insurers are facing intense pressure on rates. But litigation is the one thing that the state could have controlled, but chose not to. Now, with the changes in law that it made in April, ultimately, we're in line essentially with the rest of the country.
So you're saying, hold on. Essentially, you're saying to consumers, hold on, this is going to work.
Yes, I'm saying, listen, it takes 18 to 24 months, not from the day that they pass the law, but from the day it becomes effective. It became effective in April, so it's going to be mid-25 before we see major rate relief. But I think ultimately what you're going to see is things begin to stabilize. I expect another 10 to 15% in 2024, and then the things to stabilize in 2025. But we need to go a year or two without storms, really. Honestly, we need a kind of a respite from some of the storms. Now, we obviously can't control that, but this market is incredibly fragile. Think of it as a patient that has just gone through major surgery. It's going to take a long time to recover from that major surgery. And we've always said it's going to take 18 to 24 months. And that's really, we need that time without a storm. We just don't need additional complications.
That's really concerning because to your point, we cannot control the weather. So I want to talk about the reinsurance portion of it, because reinsurance was another part of this law, and the state really bolstered the reinsurance market for the insurance industry, $2 billion worth. I listened to some of the things you said this week, and I believe the number was 6 companies of 165 are taking advantage of that. Why?
This was something that I brought up and hand delivered the Republicans the amendment that would have fixed this program. The reality is reinsurance is extremely complicated. There's 3 components that insurance companies have to have in order to be deemed eligible to write insurance for Fannie Mae, Freddie Mac for mortgages. 2 of those components were missing from the FORA package, which means anytime you put together a consumer product and you have to piecemeal that product, it's going to raise the rates.
What 2 components were missing?
They were missing a reinstatement layer, which meant that in the event of a second storm in the same season, they would have started at 0, right? Instead of starting wherever they had finished utilizing the reinsurance from that first storm. And these mortgage companies also require that your reinsurance package have coverage for non-hurricane related events. We know here in Florida, some of the most costliest storms aren't actually hurricanes. It's the hailstorms, it's the rain events that occur in August, it's the flooding. So in order to qualify to be a qualified insurance company through Fannie Mae and Freddie Mac, you have to have 3 components to that entire reinsurance package. Well, FORA was missing 2 of the 3. They increased the cost by 50 to 65%, and then they had to go out to the private marketplace to try to fill 2 pieces with a capacity that's already really tight.
So FORA being Florida Optional Reinsurance, that's a reinsurance package. So Jeff, with those components missing, and from what should be a really bolstering reinsurance component for companies, well, what's your suggestion? What do we do there?
Well, honestly, they should have just adjusted the Catastrophe Fund of the state of Florida. Florida has a CAT fund, but it's really where those monies kick in. I think the bigger problem Florida faces is no one has defined for me, nor the governor, nor the CFO, nor the legislature has defined for me what is our strategy. What is our long-term strategy for dealing with property insurance in Florida? It should be to lower rates, to increase competition, and to ensure we have a thriving market. And we should be holding all of our bills up to that light. But we need to define the strategy. I think the challenge we're running into in Tallahassee is we have bill after bill that are all tactical, but I'm not sure they're playing to a larger strategy. And so I think the first thing the legislature has to do is come back in, and the leadership needs to define its strategy for how we're going to deal with the property insurance market going forward, understanding that anything they do takes 18 to 24 months.
That's such a headline that seems so simple and yet so complicated. We want to take a quick break, so stay tuned. We will be back in a couple of minutes with Hilary Cassel and Jeff Brandis on insurance. We are back talking about home insurance, property insurance, someone that affects literally everybody. You're 28 buying your new home, you're 68 in a home you've been in for decades. Hilary Cassel, Jeff Brandis with us from St. Petersburg. Jeff, you were talking last segment about how simple it is for the legislature to set the headlines to answer affordability, availability. Are you, now that you're out of the legislature, are you involved? Will you be involved this session on really advising as someone who really knows things?
Absolutely. So, when I recognized from my 12 years in Tallahassee is so much policy is done tactically without a larger strategy at play. And criminal justice, property insurance, transportation, housing, those are just 4 areas that I found there was very little kind of overall strategy. And there was a lot of year-to-year tactical moves. So for me, the goal is this year to make sure that we're bringing in best practices from around the country, specifically in the property insurance world, to help solve this problem for Florida once and for all.
And do you think, is it politics that gets in the way? Is that fair?
Well, look, I think for years the trial bar was telling the state of Florida to do nothing. There was, the trial attorneys had figured out this formula of assignment of benefits and the one-way attorney fee statute and essentially weaponized it. Florida at one point was 8% of total property insurance claims and almost 80% of national litigation. Now, we can't be the most hurricane-prone state on one hand and the most litigious state on the other and expect property insurance rates to go down. Those two things can't coexist. So the legislature took on the tough thing that they could deal with, which was the litigation rates. And I think that will begin to stabilize over time. But listen, even Citizens owned property insurance, Florida's property insurance company, was getting sued 900 times a month last year. It's almost unimaginable that a company could get sued 900 times a month, but that's what was happening.
And Citizens actually is a whole other conversation as the insurer of last resort, which has become the first resort for a lot of people because of this crisis. So, Hilary Cassel, I want to direct you, and I don't know if you saw it or not, but one of your colleagues in the House, Spencer Roach from Fort Myers, Republican from Fort Myers, tweeted this week, I'm going to quote him, "I have a solution to Florida's insurance crisis. Stay tuned for session 24. So I reached out to him. We invited him. He was unable to make it today, but have you heard about anything being filed yet? Because I know you have ideas. Tell me both. Have you heard of anything yet, and what are your ideas?
We haven't heard of anything yet, but I think that's the typical Republican response: is knock on wood and just wait till 2024. But Floridians can't wait anymore. The cost of homeowners insurance has been rising, and reinsurance costs have been rising since 2018. People need immediate relief, which is why we proposed, and I've been advocating and oftentimes spoke with Senator Brandis on the other side when before I was elected. We've got to deal with the CAT fund. The CAT fund is supposed to be there.
Catastrophe fund that everybody with a policy, not just windstorm, any insurance policy holder in Florida pays.
Absolutely. Yeah. And it's there for times exactly like this. But what happens when you think of a fundraising thermometer, right? The goal that you're trying to reach is up at the top, and insurance companies have to fill the gap between what they're able to pay out and reaching the very top of that goal.
Well, what is the goal? Help me with
the goal. That's the problem. The goal continues to change. The CAT fund, where insurance companies could immediately lower their cost of reinsurance and automatically have to pass that savings on to consumers, the CAT fund keeps raising that goal every single year, and that's why insurance companies are having to go to the private marketplace to fill that capital, spending more money on reinsurance, which immediately rises and increases insurance premiums. But we also got to start looking at some of the costs that these insurance companies are incurring. We have outside adjusting firms that come to the state of Florida after catastrophic events that sort of barter and put into competition those resources with insurance companies that raise those costs, that pass on to insurance companies, which also raise the price. I think we need to audit those companies. We need to make sure that they put together an annual catastrophic plan so they can't be in competition and put insurance companies in competition with one another to have those resources available, which increase those costs, increases those premiums, and also consumers end up having to wait for relief for an adjuster to come out when they've just sustained losses as a result of a catastrophic storm.
Jeff, I'm kind of stuck in the back of my head on something you said about we need a season without a storm, and that's such a big variable. Do you foresee any way to really make affordable insurance for everybody? I mean, is that even possible at this point?
Absolutely. Absolutely. But we've got to follow the best practices from around the country. We've got to allow for policyholders to be able to price policies to their pocketbook instead of the legislature continuing to define what these insurance companies have to offer. For example, Florida could offer actual cash value on roofs instead of replacement cost. That would be a major step in the right direction. But unfortunately, Tallahassee will not allow that. It's kind of this nanny state.
Why
well, because they believe that there won't be enough, that people won't look through their policies, that they're not smart enough to look through their policies and understand the difference between replacement cost and actual cash value or stated value. And that if there is a major storm, there will be a bunch of blue roofs tops because people didn't know what they were signing. But around the country, frankly, a vast majority of the states allow for actual cash value on roofs. That would have almost prevented this crisis that we've seen over the last 2 years because people would have just shifted to ACV policies, actual cash value policies, and we would have gotten out of this assignment of benefits, lawsuit, new roof, where essentially you and I were paying for our neighbors to get a brand new roof through our property insurance.
Are you in agreement on that? Yeah.
I've always agreed that litigation reforms were necessary. I think moving to an ACV roof is a bit complicated when you don't have the appropriate disclosures, because at the end of the day, consumers need to be made aware that while they're getting a cheaper policy, that they're going to have huge out-of-pocket expenses after a catastrophic loss that they may or may not be prepared for. And I think with an appropriate disclosure, which the legislature wasn't willing to do, I was actually advocating for an appropriate disclosure. They were not willing to put that disclosure in place, so consumers were put on notice before that policy was issued that this could result in high out-of-pocket expenses for them.
I think this is really a clarion call from you both for people to really know what they're getting into, know what their policy says, know what they're agreeing into, and know who they're dealing with when they need to do repairs. So Jeff Brandis, Hilary Cassel, two people who I think probably know more about this industry than anyone that's not in the industry. I sure appreciate you coming on. And I would love for you both to be available to us for some more brain picking as this goes on.
Absolutely.
All right, thank you. Thanks so much.
Love to do it.
All right.